Good morning. Welcome to Tri-County Suburban Realtors. Today's program, Housing Equity, Opening Doors with Housing Choice Vouchers, is part of a series of workshops on the power of diversity developed by your Tri-County Suburban Realtors Diversity and Inclusion Committee. This program in particular was also developed by the Fair Housing Month event committee as part of the diversity and inclusion group. My name is Donna McCole, and I'll be your moderator. I'm a first-time moderator, but I've been a monitor for many years, starting as an RA in college. But what I'd like to do is just give you a brief idea. We're going to have a panel discussion and then a Q&A. So bring on your questions.
Sorry, I have to be the one to.
Before we introduce the panel, let me give you some background on, share with you some background on the Section 8 program. It was authorized by Congress, Section 8, in 1974, and developed by HUD to provide rental subsidies for eligible tenant families, including single persons. Under the Section 8 program, families were issued Section 8 certificates as part of a project-based rental assistance program. By the mid-1980s, the program came under criticism for a variety of reasons, not at least which was that it was concentrating poor families in specific high poverty areas. The Section 8 program was having the same effect as redlining. It was denying families the freedom to choose where to live. Therefore, Section 8 certificates were replaced with Housing Choice Vouchers, giving families the ability to choose any housing that meets the requirements of the program. As we will see during today's session, the requirements of the program include the agreement of the property owner to accept a fair market rent and the property to meet a specific standard for health and safety. Yet, despite these reasonable and easily attainable objectives, a lack of landlord participation remains a big obstacle for Housing Choice Voucher families. Our objective today is to dispel many of the myths and misunderstandings of the Housing Choice Vouchers so realtors can educate their clients and close the knowledge gap on Housing Choice Vouchers. Housing Choice Vouchers are administered locally by public housing agencies or PHAs. PHAs receive federal funds from HUD to administer the program. Today, our panel represents some of the finest in the housing authority, the housing industry in this area. Our panel represents the Housing Authority for Chester and Montgomery counties, as well as the City of Chester and Delaware County. Joel Johnson has served as the Executive Director of Montgomery County Housing Authority since 2007. The MCHA's Housing Choice Voucher Program has consistently been rated as a high performer under HUD's annual assessment program. In addition to the traditional voucher program, the MCHA has boutique voucher-related programs, including programs supporting home ownership, family self-sufficiency, veterans, non-elderly disabled populations, as well as those experiencing homelessness. Joel has served as the chair of the board of the Housing Alliance of PA and the Federal Home Loan Bank of Pittsburgh's Affordable Housing Advisory Council and other policy-related organizations. Steve Wayhock has been with the Housing Authority of Chester County for 14 years. His role involves specialized vouchers as well as grant writing. Landlord retention recruitment is his passion. He wrote 2 separate grants to obtain landlord risk reduction funds which has helped HACC recruit and retain landlords in today's market. A master's in public administration, along with being a Nan McKay certified housing specialist, has propelled his professional career at HACC, coordinating with many county entities, provide the best supportive network for his clients is a strategy Stephen uses on a daily basis. Also with Steve are Paul Diggs and Brenda Gomez of Housing Authority of Chester County. And we have Linda from Montgomery County also here. So Mary Militello serves as Director of Housing Programs for the Chester Housing Authority in Delaware County. Under her leadership, the agency has consistently earned high performer status in the Section 8 Housing Choice Voucher Program. Ms. Militello began her housing career with the Federal Interagency Task Force on Food and Shelter for the Homelessness, and has worked both in the private and public sector within the affordable housing industry. Also, Director of Training for Nan McKay and Associates, and as a consultant with CVR and Associates, providing technical assistance to troubled and recovering housing authorities nationwide. Pretty impressive panel, I would agree. So what we're going to do for our panel presentation, we're going to start the workshop by asking each panelist a question and about the Housing Choice Voucher Program. And each panelist's question builds on the question asked by a previous panelist. So I ask that you hold your questions until each panelist has made their initial remarks. Why should a landlord consider a housing choice voucher?
Well, thank you, Donna. Good morning, everyone. And I want to thank the Tri-County Suburban Realtors and Donna and Paula for putting this program together. We appreciate the opportunity to be here. As Donna mentioned, Linda Haley from our Montgomery County Housing Authority staff is with me as well. And I want to say hello to my friend in the back there, Erin Smith. She and I serve on the board of a nonprofit, so good to see you, Erin. So first, and I'll get to the question in just a second, I think it's important to understand that the Housing Choice Voucher Program is extremely technical and complicated, but part of the reason we're here today is to try to make it a little more approachable and understandable for everyone. So I'm happy to get into the specifics of the question. Why should landlords consider the voucher program? Several reasons. Number one is stability. Many of the Housing Choice Voucher recipients remain in their units for 5, 10, and we have even some that are 15 and 20 years in the same unit. So obviously landlords don't want to be in the business of turning over their units on a regular basis typically. So that stability is a significant point that is attractive for many of our landlords. The second is quality of tenants that participate in our program. They are screened by all of our agencies, screen all of the Housing Choice Voucher Program participants. So the landlord can have some confidence that the folks that are moving into the unit have a criminal background screening and have been administratively processed through each of our agencies. So once they get to the unit, hopefully landlords have some confidence in that. And there are, frankly, a long list of requirements, administrative program requirements that the tenants, the voucher recipients, have to comply with to remain eligible for the program. So again, that should be a source of comfort for landlords to understand that there's this, additional agency, the housing authorities, who are sort of paying attention to what's happening with the tenants in the unit. So if there's ever complaints by the landlord about the tenants, the housing authority can be involved, and likely the vast majority of the time, the tenants will comply with what they're supposed to do, clean up their act, and whatever the issue is, because they don't want to lose that voucher, because the voucher is essentially a winning lottery ticket, literally. So usually the tenants will do what they're supposed to do, which will typically make the landlords happy, if you will. And then we can't ignore the economics. This is sort of the third and final point around why landlords should consider it. We're all good pay. The first of the month, the rent comes in from the housing authority. I think we all have direct deposit directly to the landlord's bank account. So I don't want to bore everyone with the details, but we get the money from HUD on a monthly basis, usually the 29th or 30th of the month, and then we turn it around, and depending on how the calendar falls, we'll have it in the landlord's account on the first or second day of the month, again, depending on the weekends and things. So it's direct deposit into the landlord's account. The landlords aren't going to have to go out there and chase folks for rent, et cetera. And I think it's important to understand that the tenants, the voucher recipients, are required to pay 30% of their income towards the rent. So not 30% of the rent, they have to pay 30% of their income towards the rent, and the housing authority pays the rest of the rent. So keeping the math real simple, let's say a tenant's income yields that they're obligated to pay $300 a month in rent, and the rent's $1,000, the housing authority will make up the difference of the $700. And again, it's direct deposit in the landlord's account. So that's sort of three quick reasons that landlords, sort of in summary, should consider and embrace the voucher program.
Well, just a question. You mentioned that as part of the stability of the program, does a voucher ever expire, or does it have to be renewed?
Excellent question. So technically, it does not expire, but the tenants do go through what's known as a recertification process on an annual basis. So basically, that's an administrative check-in from the housing authority with the tenant and the landlord to confirm that the tenant's income hasn't changed, or if it has, we will adjust the rent calculations and the money that we're paying to the landlord. So as I said, many tenants will remain in the same unit at 123 Oak Street, the hypothetical example, for 5 or 10 years, and then annually go through this recertification process. But again, from a landlord's perspective, there's never really a concern that the tenant is going to have their voucher terminated. Now, if they don't follow the rules, the tenants can be terminated from the program, but the landlords would be well aware of what's happening in that scenario. And there are instances, and it doesn't happen all that often, but there are income limits for our voucher clients to participate in the program, so they can't make over a certain amount of income. So sometimes you will see tenants, and this is sort of one of the successes of the program, folks will earn more and more money and eventually no longer qualify for the program. But the theory is, as their income goes up, the rent from the housing authority goes down. So if they eclipse or breach the income limits, then they're paying the full rent. So if they choose to stay at the 123 Oak Street, the tenant should be able to support the full $1,000 rent. Keep it, real simple. So hopefully that addresses the question.
That's great information. Steve, can landlords charge housing choice voucher tenants the same rent as non-housing choice voucher tenants?
Yeah, just conventionally, whatever you would charge in your normal market is something you would charge for a housing choice voucher. We do run rent reasonable. We have an HQS inspection process, which is similar to city codes in most areas. But it's no different. But just like everything else in society, and unfortunately is more pressing now than it's ever been, affordability is always an issue, right? Whatever a client has, we don't allow them to pay over a certain amount of their adjusted gross income. So some of the times affordability can get in the way of that process, but just like realtors know on a daily basis, when you're going to purchase a property and you're going through that appraisal process and whether or not the bank can lend, it's a similar thing that HUD makes housing authorities do. We make them make sure that the unit's rent reasonable so that we're not getting price gouged or the program's not getting taken advantage of. And that includes amenities, certain, utilities, when the unit was built. So just, whatever you would charge in a conventional market, it's the same thing you would charge for a housing choice voucher client. You would want it no different. But yeah, affordability can be an issue depending on the tenant's income, what the current payment standards are set for the PHA. But typically, affordability, rent reasonableness, and then HQS is kind of that barrier, or those things that the PHAs work through. And we've been lucky, I don't know if it's, use the word lucky, but the payment standards and the market rents have also raised with the current climate. So we're able to, most of the time, match that request or what a landlord is charging to make it work. So yeah, we 100%, whatever the conventional rent is, that is what you would request.
Are the market rents by zip code within the county or?
Yeah, so not too long ago, and I'm not sure if it was the Obama administration, but they came out with these small area fair market rents before PHAs were pretty draconian and had to sit there and put one payment standard out there based off of, I think, all three of our counties, if I recall correctly. And now we get to do it by specific zip code. So what that means is, I think we're sitting in Malvern, correct?
Oh, yes.
Yeah, it's not cheap, right? But, Chester City, Coatesville, Devon, Westchester, different pockets, Thorndale, Thornton. I mean, they all have different, what we call small area fair market rents that we utilize. So that's a very important thing. And that's what HUD has done well recently, in my personal opinion, is that they realize that with resources, with better school districts, with the positive things of community and impactful changes, the housing authority has to be able to provide those SAFMRs or those payment standards for those individuals to mobilize and get into different neighborhoods. So, yeah, thank you for that. That was a good nuance.
And you can look at, like there are housing choice voucher programs, throughout the areas, including where I live in Newtown Square. So you just really, if it's the fair market rent is where you really need to look at the number. Joel, can a housing choice voucher tenant be evicted for non-payment of rent or violation and/or violations of the lease?
The short answer is yes. And it's important to understand that the voucher relationship that the housing authority has with the tenant is essentially a tri-party agreement with the landlord. So the housing authority issues this voucher to the tenant. So John Smith gets a voucher from the housing authority, and Mr. Smith goes out into the private market utilizing these rent caps that Steve described and tries to find a landlord that will agree to abide by the program guidelines. And then the housing authority will enter into this, what's known as a housing assistance payment contract with the landlord. So you have the piece of the triangle from the housing authority to the landlord and the housing authority to the tenant, and then the tenant enters into a standard residential lease between the landlord and tenant. So if any piece of the triangle falls apart, the entire relationship falls apart, if that makes sense. So part of that voucher agreement between the housing authority and the client, John Smith, obligates Mr. Smith to comply with a long list of requirements, reporting his income, telling the housing authority and the landlord if anyone else moves in or moves out of the unit, et cetera, et cetera, et cetera. So if they are not paying, if Mr. Smith is not paying his rent, because he has to pay 30% of his income, right? If he's not paying that, and the landlord tells us that, then we can terminate Mr. Smith from the program. And there's due process and all, it doesn't happen overnight, but so yes, they can be terminated from the program. And I draw the distinction between terminated from the program because there's still that residential lease, the standard residential lease between the client, Mr. Smith, and the landlord, right? So that's still in place. So just like any other eviction, the landlord would need to go to the DJ, the local magisterial district justice, to have that tenant evicted. So technically, it's really no different from the standard residential lease that any landlord would have with any tenant.
Would a judgment against somebody brought on by the landlord, would that be part of the termination process from the program?
Yes. So there's a screening that the landlord, any screening process that a landlord has that's, compliant with fair housing and all the legal requirements, that the landlord does for any of their tenants can be done with a voucher tenant as well. So there's really no distinction from that perspective.
So unless their income changes, that voucher could stay with them their entire life.
Yes, that's
And
correct.
so if they don't pay the rent, then that could be a termination activity that will affect you for the rest of your life in the housing situation. So most people with the Housing Choice Vouchers, they really want to, stay in the program and everybody works together to see how that can happen. Next, Mary. Known Mary for years. Just meeting Joel and Steve. I know Mary is hardworking in this industry. I've seen her personally doing it. Mary, besides charging a reasonable rent, are there any other requirements of the lease? And are there any addendums required by the housing authority for a lease? I'm also going to throw one thing in. You had mentioned something when realtors purchase a property with one, so if you could mention that too.
First and foremost, the owner is going to submit his lease for approval, called the request for tenancy approval. Under the regulations, the lease term must be at least 12 months, okay? At least a 12-month lease. It can be longer than that, as long as that is a common thing in that community or within that type of housing property. Not that just all of a sudden, because you're working with a voucher holder, you're going to have a 3-year lease. But if you've offered other 3-year leases and this is how you want to run your business, that's fine. Regulations, minimum of 12 months. Okay. Also, under the lease, it is submitted for approval, but HUD creates some protections by requiring a HUD tenancy addendum, an attachment to the lease. And in that attachment, it assures that anything like how you go about an eviction or your other obligations as an owner under the lease are fulfilled, as well as the tenant, and also protects against any restrictive or prohibitive clauses that may be in an owner-designed lease. Now, I have found here most owners use the Pennsylvania Board of Realtors lease, so it has certainly been reviewed and is compliant. However, if there were any ridiculous clauses in the lease, used to see years ago things like exculpatory clauses that say, you don't pay your rent, I get your furniture, I get your TV, that kind of stuff. So this addendum, written pretty much 40 years ago as we've been in this program, has addressed some of the behavioral and conflicting issues that could be in a lease agreement. So other than the time limit, and what you need to know also under that 12-month rule, because when you are representing people who are buying properties, you are not allowed to disband that lease in the first 12 months of the term for a sale or economic reason. So if you have a buyer who says there's a Section 8 contract, a voucher contract on that property, you need to know how long it's been there. If it's in the first 12 months, yes, an investor can buy, but he is honoring it through that 12-month term. What if the family you're repping wants to live there? Heartache upon heartache. So know it going in. So definitely talk to who has the listing to make sure if there is a assistance contract there, how long has it been there? You don't know what your investor's plans are. Okay. Also on sales, in the city of Chester, we had over 119 transactions of properties flip hands during last year. It was a nightmare. Now, some were buying the bundles from investors who are just getting out of the deal. We need to know that. It says in the contract, we need to know that when the property goes up for sale. Don't call me at closing and say, I've got 62 properties now, make sure my rent goes to my account, when it's April 27th, make sure it gets into the account May 1st. That's asking too much, okay? It's in the contract. If you're putting the property up for sale, you're going to notify the housing authority. And then, of course, give us a target closing date. And then also provide the name, address, contact information of the buyer. So if you're representing the seller who has a property with a contract on it, we really need your help to make sure that happens. It was a nightmare. And it's been hot, especially in Chester.
That's important. So if your client wants to be paid for all those
Yeah.
rents, you need to, as soon as you list the
Okay.
property, you need to inform the buyer.
And one other thing, I don't know if they do it in Montgomery or Chester County, but we also run a criminal record background check on the owner. So we are not required to do business with anyone. They have to be people who have no flags, basically, that could inhibit their ability to participate. Now, why did we do that? When I came 20 years ago into the receivership, there were still drug traffickers who were operating out of jail, getting payments. It was before direct deposit, but the inspector general looked up and matched social security numbers of people in jail and social security numbers of people receiving payments, and that's how we found checks going to PO boxes. I would say the digitization of money and that sort of thing helps the tracking happen faster, but that's why we run the background check. We don't want to find out it's a straw lease and the guy's really not there, or a straw contract.
Does that happen in Chester and Delaware County? Or in
Do you
Chester
do the
and?
criminal
So
background check?
we don't, we have an owner's responsibility form that we utilize in order to make sure they're compliant and
If somebody's purchasing it via a corporation or LLC, are you drilling down deep to the ownership or just to the individual?
Whoever's going to receive the money is the one, yeah, who has to. And you mentioned the drill.
proof of ownership.
Oh,
Proof of ownership.
That's the other thing that we have seen, a lot of manipulation, people holding the paper, but really not responsible for that property. It can be a problem when banks take them over for defaults. We really want anyone who's receiving the money, it's not just saying I'm taking the rent, they're saying I'm going to make sure this property remains in good condition so that the health and safety of the family is not at risk.
And just like we're looking to build a relationship to understand the Housing Choice Voucher program as realtors, the PHAs, they need to build that relationship with the property owners, the landlords. They need their contact information. If there's a problem ever, they can solve it together often before it ever gets to a legal situation. But if you let it fester and brew and just come in and say you have problems, at the 11th hour, then it's going to be harder for everybody to solve a problem. So now it's up to the audience. Let's have some questions. I'm going to just repeat your questions since we're being recorded, and if you want to direct to an individual member, or just let us know. And if you could let us know what county you're in.
I'm Sean Marie Freeman, Montgomery County. I've had a lot of people with vouchers who were living in the property for a long time and say the owner got a foreclosure, but they didn't let you go. No, like, do you have a process for that? Or, because sometimes the renter knows, like, they might start getting stuff at the address and they reach out to the owner and then the owner ghosts them or whatever, but they get put in that position. Are they immediately helped to find something else? Because they're usually calling us and I'm like, or.
So they're getting either a Liz Pendant's
Right, at
notice
the
or
address
sheriff
or
sale.
something like that, and they don't know it's going in foreclosure, but is it anything that like comes from the government to you guys to let them know, especially if they have a mortgage on it versus a write-out owner, that doesn't have any type of situation?
Is there a process in place to handle it?
So typically, it goes back to what Donna said a moment ago, that we want to obviously hear as an agency from the owner as early in the process as possible. But
Right.
obviously, we recognize sometimes that doesn't happen.
Right.
So we will try the best we can to make sure that the tenant can transfer their voucher somewhere else. But to your question about, do we actually get a formal notification from another entity, we typically don't. So, That's, that is part of the challenge. But I would say, and Linda can correct me if I'm wrong, I mean, Linda works in the program on an hourly basis as the director of our voucher program. But it doesn't happen, it doesn't happen all the time. Yes, it happens, but it's not, I mean, we have 2,300 vouchers in place across the county. And it probably, I mean, Linda would have a better sense of how often it happens, but it's not.
I would say, truthfully, I've seen it twice. And I've worked for the Housing Authority for a very long time. So what we found was the bank would then notify us. that
Yeah, that's what I was trying to figure out.
Payments were to go to them.
Okay. Got
And it's all legal and everything, all the documents, but it's only happened twice. The tenant, of course, is always offered a voucher to move
it. Right.
in the meantime, but only a couple times have I seen that.
And extra protections are put in place under the regulations, especially with COVID creating some economic hardships on owners who ended up in default, to try to not have someone on the street, so to speak. There's extra protection, so they can be represented in time.
My question is a two-part question for Mr. Johnson. You had said in your example that the 700 and the 300 to equal $1,000. Am I correct that the voucher is paying the landlord the 700 and the tenant is paying the landlord the 300, or are they paying you the 300 and you're paying the whole 1,000?
Excellent question. The former of what you said. So the housing authority pays the landlord the 700 and the tenant pays the landlord the 300. And if the tenant's not paying and the landlord tells us, then we can follow up with the tenant, right? And technically it becomes a program violation and they technically can be terminated. So there is an incentive for the tenant to pay their rent to the landlord on time.
I'm kind of looking at this as a landlord's perspective. What's the incentive to the landlord if that situation happens and I, as the landlord, notify you that they're not paying their $300? Now you can rescind them or terminate them from the voucher program. I still have a lease with them. They're obligated to pay $1,000 a month now. They haven't paid the $300 a month. Now I'm on the hook for them possibly not paying $1,000 a month. And I think years ago you used to help with the eviction process, if I'm not mistaken. It sounds like.
So you can go to the landlord would have to pursue the standard eviction process with the DJ, the local DJ, in that scenario. And one of the reasons would be the non-payment of rent, right? But again, none of this happens overnight, quote unquote. So we will continue to pay the rent up until a certain point, and there's notification periods and things. So it doesn't happen tomorrow. If the landlord calls us this afternoon and says, John Smith hasn't paid his rent for 3 months, we're not terminating Smith tomorrow, right? It's going to take a period of weeks or months, typically.
And if I can add to what Joel is saying, it's the landlord's responsibility to enforce their lease, period. So they're responsible for ensuring that if that tenant does not pay, that they need to do their due diligence. What typically happens is that the landlord looks to us as the PHA to kind of, if you will, kind of fight that battle. But it's not our responsibility because, as you alluded to earlier, we have a HAP contract, the HAP, which basically specifies our role in the process with the landlord, and again, the lease with the tenant, with the lease with the tenant and the landlord. So it's very imperative that if a landlord is going to become part of the program, is that they understand their own lease and they understand the mechanisms of, divorcing a client, if you will, if something were to arise from breach of lease actions. So it's very important that they understand their own lease, because a lot of the times landlords don't understand their lease and they're looking to us to kind of help, kind of get them out of the situation or whatever. And we will assist where we can, but the Public Housing Authority, we're not responsible for that. So, whenever you're talking to your landlord, just make sure that they understand, their lease. I'm sorry, my name is Paul Diggs. I'm the CEO of the Housing Authority of the County of Chester. And I'm also a licensed real estate broker in Maryland. So I understand, you know, the real estate world too. Yeah, I understand the real estate world in, you know, the public housing world. So that's one of the things I would definitely reiterate is that lease part is they understand their own lease. So.
Donna, also, yes, you mentioned, most landlords get into that pickle of non-payment because they think, oh, that first 150 they forgot, I'll let it slide. The second 150 that's their share, I'll let it slide. I will say right now, enforce the term of your lease, all the terms of your lease, the first time it is not followed. And you will have collections. It's that, I had one tenant, share was only $40. And they actually said to the landlord, will you come over here and get this stinking $40 I'm supposed to pay? Well, it's not a stinking $40. It's your obligation, get it to the landlord. And if they don't get it to you in the format that you've requested, unless you're accommodating, again, enforce the term of the lease, always. Because if you don't the thing about letting one thing slide, I let that 150 slide, now you got a lease provision on pet policy. Oh, now the dog's in the house and you have a no pet policy. Don't let anything slide. Be aware of what your lease says and make sure you enforce it.
I see you had mentioned in your bio that you had applied for grant monies to
Yeah, I'm like,
work with the family. So I know
I'm
Steve's got
listening
something to say.
yeah, I'm
so.
listening to our new executive director, Paul, and we have Brenda Gomez, who's our HCP director. Chester County does have a unique landlord risk reduction fund. The situation that you mentioned, everyone gave you the correct answers, right? But there's other situations outside of that occur. Life happens. Somebody vacates the unit, leaves, just a ton of stuff in the unit. They just left their life in the unit. And the landlord sits there and of course the HAP then gets terminated because it's a vacating of unit. And what's that landlord to do? And say it happens, 1 out of 3 times or whatever happened in that occasion. The Housing Authority of Chester County does have a landlord risk reduction fund up to $5,000 that we can compensate landlords because we're trying to recruit, we're trying to retain. Without you guys in this room or without landlords in general, our low-income tenants or tenants in general just don't have the resources or housing available. So if there's unexpected vacancies, things like that, damages, the Housing Authority does have that fund. It is only issued or evaluated in the application form after a tenant moves out because we do ask the landlord, if somebody were to clean that unit or they had to hire a dumpster or they had to repaint or fix a drywall. We ask for all the receipts, all of those things, but we do want to provide in Chester County, and I'm sure it's the same for both of them, some protections to alleviate any concerns, as well as a financial backing that we're privileged to have at the Housing Authority of Chester County, but that allows landlords to feel that there is other avenues to recoup some of those funds in certain circumstances, because like I said, life happens. Things can be difficult. And without that fund, we're not really able to recruit like we want to, especially in certain markets that we're in now.
Some landlords that I know that are Housing Choice Voucher participants, it doesn't seem like it happens often because people want to maintain their voucher. So I hear of it occasionally, but it doesn't sound like it's a high frequency situation.
We would never want to scare the investor away from the opportunity, but they just need to go in with their eyes open. Okay, it's not just about collecting the money and managing the brick and mortar property. It's the relationship with the tenant and they're knowing what you expect of them. I had one very successful investor say, as he was showing the house, oh, we love to rent to you, but if the rent's not here by the 5th, I file. Set it up right now. Set it up. Tell them what the expectations are.
Question in the back.
Hi, Mary. How are you?
Hi,
This
Mary.
question's from Mary. My name is Tahira. I'm from Chester City.
Speak up a little louder.
Sure. My name is Tahira. This question is from Mary, Chester City. I have a 2-part question. My first part is, are the clients or tenants allowed to use, for Chester City, are they still allowed to use their voucher to obtain home ownership? Or is that program discontinued?
No. The program has never been discontinued. It's there. Delaware County Housing Authority had for years, Frank Faciola, who then left to work with veterans in Philadelphia. So they have kind of communicated they can't do it. But no, anyone in the city of Chester can still, it's called the Housing Choice Voucher Home Ownership Option. And basically, the rental subsidy that's being used can then be directed towards a mortgage payment if they qualify. And how do they qualify? And this is where you guys really can come in. Our standards are they have to at least be in the workplace 2 years or disabled, and their credit score will enable them to be mortgageable. They have to have saved 3.5% of the selling price of the house so that they have some skin in the game. They have to attend the first-time home buyer education class and homeownership class, and they have to be a tenant in good standing. In other words, they have had a good track record with inspections and maintaining the home and following the rules of that other landlord. So yes, absolutely.
And who do they contact for that though? Like, how do they get started with that? Do they just contact
They
them?
can tell their assigned occupancy specialist they're calling directly.
One more question,
Yes.
the other part of my question, as far as a tenant, when they're gonna go get a Section 8 property, and these landlords are saying, you have to have a 620 credit score, but Section 8 already runs their credit. Is that a standard procedure? Are landlords allowed to do that if they're getting a client that's on the program?
First of all, under Housing Choice Voucher, no credit is run. Okay, no credit is run. We will ask for a merged credit report if they're interested in the home ownership, because that's part of proving their mortgageability, but not for participation in the rental assistance program. Yes, there are management companies that are using that number as a threshold. We try and communicate with them. It's just not a realistic thing, but because it's a very tight market, apparently they're finding people with that 620 and our people are squeezed out. What we can do is, as part of the apartment owners association, we could appeal to them and have them say, look, a voucher pretty much gets people in the income buying power, depending on whether they're a 1, 2, 3, or 4 bedroom household, anywhere between $65,000 and $85,000 in our market. So you're not looking really at someone who is just on public assistance when they're a candidate. They have enough subsidy and buying power that will make them, in their payment standard, be able to compete against a renter who's showing that. Then you have to ask yourself, they don't have a credit score because many are unbanked, okay? Or many, this is their first time. So if they can look at income and maybe credit references, you just have to ask. Don't ask, don't get. See if you can get them off that number as being the only way they'll qualify the renter. That help? Unfortunately, it's some of the biggest apartment complexes in the county that do that. So mom and pops aren't doing it so much.
Right here. What county are you from?
Chester County. My name is Solana. I work for Citibank. For the voucher to be able to use for a mortgage payment, you mentioned it's available in Chester City. Is it available in Montgomery, Chester as well?
Yes.
Also keep in mind with mortgage companies that there's a lot of different programs that mortgage companies have for first-time home buyers. So that could be additional funds that could go towards the closing costs to help somebody get into their home. Question in the very.
Just a clarification on the home, so just to sort of manage expectations around that home ownership option, it's a wonderful tool for both the buyer and the seller, and all of our housing authorities offer it. But again, to manage expectations, if John Smith is at 123 Oak Street, there's no guarantee that he can convert that to a home ownership if that landlord is interested in selling, right? So, because there's price points and, all kinds of things that go into the whole process. So it's not like you just flip a switch. So my point is, as realtors, if you have a landlord who's interested in selling their property and they have a voucher holder in place, you can't expect that it can be converted from a rental voucher to a home ownership voucher overnight. It's going to be a long process, and that's even assuming if the client's even interested. So just to sort of, it's not like oh, next month we're going to sell to our longtime voucher tenants, if that makes sense.
Where they've been able to use it, just so you know where, it's been a lot of new construction that was, had layers of subsidy in their construction. So they were creating affordable housing opportunities of homeownership, and then all the numbers lined up. Okay, and, you know, beautiful things like Pennsylvania Housing Finance Agency giving the 3.5% mortgage on a new construction. Now, I haven't seen one of those in a while because we sold what we had and what we developed.
I think they just have a new program they rolled out on Monday. So talk to your mortgage lenders about it. Sounds really good. We're in the very back there. You've been patient. Hi.
Hi, my name is Arika Miller with Delaware Realty and Property Management. And that's exactly what I wanted to ask with regards to, I guess, affordable housing, subsidized housing, and how long does the process take with regards to utilizing the voucher program to purchase the home? He just said that.
He has to come to us first, and we can tell you, right, I do a pre-qualification for them. So if they're interested, have them come and we'll see where they stand on those things that I mentioned. Have they done the 3.5% of the selling price? Have they done enough saving? Okay, so are they working, or are they a disabled household with enough income to be mortgageable? Okay, so if the family is interested in pursuing, have them come to us first. And then in the city of Chester, the trainer is the Chester Community Improvement Project. They train the first-time home buyer program.
You partner them with the program to
Yes,
get
they're
the
the
training?
trainers, they're the
Okay.
trainers, but, you know, the qualifications. They're gonna, if they have to do credit repair, they will guide them in the credit repair in order to that to be a viable outcome for them. If they have to, if they just don't have the money saved yet, we say, okay, keep going on that path, get some savings, and come back and see us.
And what we can do is gather the specific contact information between each agency for that program, as well as maybe if there's a specific contact person for the landlord. So we'll share that with all the realtors. Question in the very back here.
So one of the I'm Teresa Kaler. I work in several different counties, so I'm just gonna say all of them, all the above. One of the arguments I get from, or not arguments, one of the concerns I get from a lot of landlords about the program is I've heard that you get a tenant in there, they stay for 5 years, they keep renewing the lease. We can't terminate the lease on them just because we want to get a higher paying tenant and we can't raise their rent. So we're 5 years into this and we're under rented. Is it allowed to put in, because they're putting it in their standard leases for everybody else, is it allowed to be put into the lease that there's a 3% increase in rent each year at renewal or something like that?
Yes. Yes. You can have it in there. However, the housing authority is obligated to tell the family whether or not those increases have, based on their annual review, would also cause a rent burden of them above 40%. Now, we only have the discussion with them after the first year of the term of the lease. Prior to going under contract, though, it's a no. If what that landlord wants, because they want to execute a new contract, ditch the other one, they cannot contract at a point where they're rent burden. Because why? We know they're going to go down the rabbit hole and end up evicted. Okay, but at the time of renewal, landlord says, this is what I need to make my business goals on this property. We look at it, and if it's comparable and you're not gouging, but it's not affordable to the family on the 40% rent burden rule, we have the discussion. They can choose at that point to say, I'm going to risk it, I'm going to stay, this place is working for me. But you need to at least present it so that that coaching can happen.
Okay, so at the time of renewal, not the first lease. Okay.
I'm Christine Perry. I'm a realtor mainly in Norristown in Montgomery County. My question is about the condition of the property. I understand that there's requirements that the property must meet to be considered in the program. And what are those requirements and how is it inspected and how often?
So since you're in Norristown, I'll jump on that one. And I'm sure you guys could correct anything I say that's incorrect. So part of that the triangle agreement, tri-party agreement that I described earlier, is the obligation for the landlord to maintain the property consistent with what's known as the Federal Housing Quality Standards. Steve mentioned it earlier, or HQS. So that's the physical inspection standards that HUD imposes on all vouchers. And we have a third-party inspection company that does that for us, and I think your agencies do as well, maybe the same company. But in any event, and Steve mentioned this earlier as well, and I should say that at the lease up, the landlord has to present proof of taxes paid and current on all utilities. And part of that initial lease up process, we do a physical inspection, this HQS inspection. But the HQS inspection, the standards, the federal standards, it's like, I don't know, 8 or 10 pages or 12 pages, something like that. The more lenient than most municipal UNO inspections or COs or whatever the municipality has in place. Typically, the HQS is more lenient. So if the landlord's able to get a UNO from the municipality where the unit's located, typically they're going to pass the HQS inspection. So I think part of the question was how often. So the HQS happens at the beginning of the lease. And I think all of us have gone to a 2-year cycle, right? Biennial. So every 2 years, the housing authority will unilaterally go back and inspect that property. But there's important protections for both the tenant and the landlord that the housing authority will do essentially complaint inspections. So if the tenant says, I don't have any heat or I don't have hot water, we will go out and do an inspection. And then if we determine that to be the case, it's incumbent and we require the landlord to correct the deficiency. Or the converse, if the landlord says, this tenant's beating the heck out of my unit, we'll go out and do an inspection. And we'll say, well, Mr. Smith, when you moved in, there wasn't a hole in the kitchen wall. So, then it's incumbent on the tenant to have that corrected, usually through some sort of agreement with the landlord. Or we'll even do inspections if the neighbors are complaining about a particular unit. So to put in perspective, we have about 2,300 vouchers under lease across Montgomery County, and we do roughly 4,000, 4,500 inspections a year. And we're only doing the standards every 2 years, so you can sort of do the math. We do a lot of complaint inspections. So we want the conditions of the units to be very good, right? And I should mention while we're talking about inspections, something that I know we're sort of groaning about is by October 1st of this year, so don't look now, but a little less than 6 months, all housing authorities nationally, so certainly all 3 of us, have to convert from what I was describing, the HQS inspection standards, to a whole new federal inspection standard, which is known as INSPIRE, a whole big acronym of National Standards for the Inspection of Physical Real Estate, I think, or whatever it stands for. But the point is, the entire inspection protocol is changing for all subsidized properties across the country. So technically, it started last October, but it's a whole big mess the way HUD rolled it out. So then they gave everyone a break, and now we're all required to do it by October 1st. So just for sort of full disclosure, you might hear, out in the communities that the inspection standards are changing, and that's true. And it's a requirement of the federal government. So by October 1st, all voucher properties will be held to the new physical standard.
In order to preserve the traditional landlord-tenant relationship, we do complaint inspections, but when they make the first call, we say, when did you contact the landlord about this? So if they have not contacted the landlord first and given them the opportunity to correct rather than to be held in a compliance inspection for not doing something, we wait. And the INSPIRE inspection standards I have for you here in a handout, as well as the paradigm, as he described, the triangle relationship of how the contract, the lease, the housing voucher tie everybody together.
The Housing Authority of Chester County is currently doing inspections.
All right, okay.
I had a question early on, and I
Oh, yeah.
have to come back to.
Yeah, my question was,
I'm Teddy Ashby, I'm from Philadelphia.
Here, could you speak up?
What is the eligibility for, to get a housing voucher?
So what is the eligibility
What's the requirements
to get a housing
besides
voucher?
being alive?
We have to be within the very low income limits. HUD requires us to at least admit 80% of our people. At extremely low, it's 75-25. But the very low income limit for your area, it's different for Delaware County than it is for Chester County, Montgomery County. But also the eligibility requirements also include that you have not been evicted from public housing in the past or in the last 5 years. There are lifetime bans for sex offenders, for those who've been involved in crystal meth type offenses. So mostly income and eligibility under suitability. Right.
I have a quick question for Steve. So I know in Chester County and really all the counties, there's other nonprofits that work within the housing industry in conjunction with the housing authorities, I believe. How do those groups work? Are they bringing potential candidates for housing that could apply for housing choice vouchers, or do they have some kind of authority themselves?
I mean, there's a unique thing in relation to HUD is this, they've kept improving. And what I mean by that is there's always these different subset of individuals that need vouchers. So one specifically is our HUD Voucher program, Veteran Affairs Supportive Housing, which is a interesting federal collaboration. I know that Monco has it because we port them vouchers quite often. But it's where we work with the VA in Coatesville, and they provide us referrals. And we also have that same sort of program with a fostering youth independence program, a family unification program where we work along with CYF and we receive direct referrals. And Brenda and Paul can discuss how we do it with our COC and our mainstream and all the different partners there. If you guys want to take a crack at it.
Right, so it's the same, so we partner with the county itself and they submit the referrals to us based on the incremental vouchers that we get from HUD. And we collaborate to also assist and be able to issue the vouchers, but it is a collaboration with the county itself.
And the best part about that, in my opinion, for landlords is, I talked about this when we all did our little Zoom call before this, before we were going to meet each other and whatnot. Both of them for a significant amount of time. But the best part about these different subset of vouchers or these special vouchers is landlord support, right? If there's a John Smith or a Susan Carroll who's not doing well in their specific unit or their family, there's a case manager attached to that household that the landlord can communicate with. So that little, we talk about triangle between the PHA, landlord, and the family, but that little case manager, landlord, PHA triangle is equally as important because you can address a lot of issues before they become issues. If somebody's not paying their $40 rent, you're going to get late fees and there's going to be specific things. Or if the HQS failed because of hoarding or a specific issue in the unit, that the case manager can work with the client to mitigate those circumstances to avoid termination, to keep them on the program, to keep that family housed. And the landlord has a direct contact to go to them. Maybe they don't have to call the PHA. They can call that licensed social worker and say, hey, listen, this individual's had maybe A, B, or C, or we need a complaint inspection for this. Should we call the housing authority? There's a lot of different collaborations that happen, and that's with community partnerships. And HUD has done a good job with these different subset of vouchers, having those support systems there. So it's worked well in Chester County, and I'm sure it works well equally for PHAs.
And we as realtors, we come across people that are having economic difficulty. I recall myself in 2008 when the market was down, I was helping somebody with a short sale, and I didn't realize it until they were under contract, but they were living in a house without water and heat. So it was summertime, that didn't matter, but they had no water in the house. And a family was living there. So then, we as realtors, get into gear to try to help people. And in that circumstance, the buyer was willing to turn on the water for the occupants until 7. So there's, we're part of this community to really help identify people that could use the housing choice vouchers.
Can I just jump back to the question here in the front about how do you qualify for a voucher? So I guess Mary answered that question exactly right. But there's, I think, and maybe everyone knows this, so maybe this is like, 2-101 for everyone, but not everyone who qualifies for the voucher gets the voucher. So the voucher program is distinct from, say, the SNAP food stamp program or Medicaid, Medicare. Under those programs, everyone who qualifies by income gets it, period, right? That's not the case on the voucher side. So I just wanted to be clear that, and we get calls all the time in our office like, oh, my tenant can't afford the rent, can they get a voucher? Nope. The short answer is literally no, they can't. Because we don't get nearly enough money from Congress to support all of the need, if you will. So to put it in perspective, so we have a waiting list for people to get on the voucher program. And ours is currently closed, so no one can apply to the Montgomery County Housing Authority's voucher program today. We have a few hundred people on that waiting list. The last time we accepted applications or opened the waiting list was in June of 2019, so almost 5 years ago.
Well, my question came because I had heard people say they couldn't get the voucher, and I'm saying, well, you appear to be very eligible.
Right, so that's exactly why I wanted to raise it. So
Funding is the cutoff.
So the last time we accepted applications to our voucher program was almost 5 years ago, and we got we were open for a week, and we had it all online, and I think we all do it sort of the similar way. We got almost 10,500 applications in 7 days. So that's a sort of unmanageable number. So the standard in the industry is you perform a lottery, and we place 1,000 of the 10,000 that applied. We place 10% onto our waiting list, and since 2019, the last 5 years we've been going through, and now we have a few hundred left on our waiting list. But the point is, just because you qualify, I just wanted to make the point that just because you qualify, you're not getting it necessarily.
And the special purpose vouchers that Steve talks about that are tied with some case management for mainstreaming persons with disabilities, the veteran supportive housing program, family unification for kids that are going up from foster care back to their parents, all of those are directed. They're not they're from referral by a relationship with the county office or federal Veterans Affairs office that is dealing with them. So they're literally going in through a direct referral. At least that's how some houses.
And just to build on Mary's comment, those all these sort of boutique specialty programs that we all have are all great. But again, to put in perspective and manage expectations, we have about 2,300 vouchers across the county. And for this FYI, the Foster Youth Initiative Program, which helps kids aging out of the foster care system get a voucher. We have 10. So it's 10. It's helpful. It's going to help 10 young adults.
We have 15.
And they have 15. They have a lot more next door. But my point is, it's not like there's hundreds and hundreds and hundreds of these things. So it's a small. That's why we call it boutique. It's a small little program designed to help a very subset of the population.
To get some history, up until about the mid-90s, 96, every year Housing Authority could count on, if they were performing well, maybe 50 to 100 new in their allocation. Okay, that was what Congress handed out in terms of that. We have not, and that was what I used to call fair share vouchers. Didn't matter, your just name was on the list, the next person up gets it. Have not seen that stuff. The kind of allocations we're getting are these onesie-twosie boutique programs, 15 for foster youth, 33 for mainstream with disability. And that's why that list does not move that fast, because you have to have people leaving the program in order to issue a loan.
And just how do vouchers become available? So in our case, we have about roughly, it varies from month to month, but about 10 folks leave the program for one reason or another. They got terminated because they weren't complying with a lease. They made too much income and no longer qualify. They died. I mean, there's all kinds of reasons people leave. they go into nursing home. There's all kinds of reasons. They go to jail, whatever the reasons, there's all kinds of reasons people leave, but about 10 a month. So we are then going to our waiting list and saying, okay, you know, in March, we have 10 vouchers that we can issue to people on our waiting list. That's why it takes so long to go through the waiting list, right? So again, it's not like there's gonna be, you know, hundreds and hundreds and hundreds of voucher recipients across these, you know, the counties here that are on the, you know, street.
Like Joel said in his initial comments, it's like a lottery ticket. This is something that people want to preserve and nurture. And, I mean, people are waiting on the list for years and years. So they want this voucher, they need it. We have a question in.
Yeah, I had two questions but I'm gonna flip it because you just dealt with.
Speak a little louder and what county?
I had two questions and I'm gonna flip the order because you kind of got into the second question. So when I call around for a client who has a voucher, let me put them both together. A lot of feedback is what I'm getting is, oh, well, I don't have time to take the classes as the landlord to be able to, you know, accept the voucher. And the second part of my question is, if somebody needs help from the government to help pay their rent, why is that an acceptable discrimination based on people being poor? Why can't we go to the government and say, look, money is money. They're going to get their money every month. Why are they allowed to discriminate and say, I can't take a voucher? So those are the two
No one in
questions.
Pennsylvania has taken up source of income as a protected class. They have in New Jersey. I think it started in Maryland.
Delaware too.
In Delaware. That's what you guys can do, all right?
So
Go to
who-
Harrisburg. Someone needs to take that up because as I said, you equalize with the amount of subsidy they receive. They are up there with modest but middle income, not very, very low. What difference does it make if it comes from Uncle Frank or Uncle Sam? Uncle Frank may be the person funding the kid right out of college because he can't quite make it, but he's co-signing his lease. Uncle Sam's at the feds. What difference does it make? And a lot of the apartment associations are using the term, we don't take third-party pays in order to not have to participate. Again, you can go after that for a form of discrimination. So we need it.
Who do we report to when that happens?
It's
Well, it's
not illegal in Pennsylvania
Oh,
yet.
not yet,
You
okay.
have to get this rolling. I know our Delaware County government was asked to take it up, council.
But also,
It's
we
not
just
there
here today, increasing our knowledge with the benefit, you know, the experience of the panelists, you know, we'll be able to communicate to the landlords what the system is. We're not going to be afraid. I mean, I've been in real estate offices that people are like, oh, you know, what do we do with this? They don't know. So there's going to be a point of information that we can share with people, and we will have follow-up information as
On the
well.
classes, they have probably heard, because Philadelphia was very strict, they had to go through the IRM-sponsored classes to be a Section 8 landlord when Carl Green was there. I don't know if they're still doing it that way or not. We meet one-on-one with the landlords if they are interested in participating, one meeting. We give them the information. That's in the city of Chester. But we also do the quarterly workshops post-COVID.
Alex?
And you've kind of alluded to this a little bit, but what percentage of the tenancies either end in eviction or the tenant being terminated by the housing authority for a violation other than, you know, they're now making too much money? Just so I get a sense of that.
A very small percentage.
Less than 5%.
Yeah, less than, yeah.
Is it less than the typical percentage in our marketplace? Have you done that?
You
That's
know,
my
we
question.
have a investor that we know together that has a pretty diverse portfolio, both private pay as well as Section 8 Housing Choice Voucher participants. And he'll tell you from day one, you have doctors who don't pay their rent, okay? He'll tell you from day one, okay? So, yeah, he said he sees the same issues. Either you're a good housekeeper and you're in the upper echelon, or you're not. Same thing, good housekeeper in the lower income, or you're not.
And I have sort of a second half of it, not really related to that, but if a landlord wants to participate in the program because there is a tenant applicant who has one of these vouchers, that's how they're put in that place and like, yeah, I'll consider that. How long is the process from the time when the landlord has that tenant application, let's say, to getting through the logistical steps so they can rent their property?
He files the request for tenancy approval, it has to be done within 48 hours in my agency. I don't know how tight you guys
So
can do it.
meaning they're,
I
that,
call it the golden ticket. That request comes in, it means I'm getting a contract, which means I'm getting an admin fee. So 48 hours, you're gonna tell them we're taking it, yes, this works, or it doesn't. So he's got to fill out the paperwork.
including a site visit?
48 hours to get to the agreement of the terms, the rent, and then the inspection will be in the next 3 to 5 business days.
So
after
it's
that.
a week
Yeah.
I'm just trying to understand the process, that's all.
And the landlord has to meet with to get his certification?
But it's not
He
that it's,
does not have to.
but it's not
We have-
taking
we
30
can
or 60
refer-
days or something.
The classes,
No,
she
no.
asked about learning, we have, basically because of COVID, things are online that we can teach them. You know, go to this website, here's the owner workshop video, that kind of thing. So if they can't physically come in, we prefer to meet them. We think it works out better than just, go to the website, read this handbook, but
I was curious, what percentage of new landlords that have one property bring you a second and want to be,
yeah.
are they
first of all-
building their portfolios?
Yeah, first of all, it does happen, and also there is somewhat of a formula that you need to talk to your investors, that it's really hard to get into this game if you can't grow, if you don't have capacity. The magic number we hear is 10. If you have 10 and you end up with a bad turnover, it's not gonna kill you. If you have one and it didn't work out, you may never recover, okay? So, yes, repeat participation is pretty much how we, in other words, we might have 250 landlords for 1,500 units, yes.
And just on that point, so many of the single property landlords, so we have 2,300, just put it in perspective, we have 2,300 vouchers under lease across Montgomery County and about 1,250 landlords. So you can do the math, many have more, but my point is many of the folks who have a single unit on the voucher program typically don't have a mortgage or much of a mortgage on that single property. They inherit it from Uncle Frank, or they, whatever the reason they came across it, right? So that's typically the case, because Mary said it's hard to make the math work on fewer than 10 or 15 units.
So I'm going to take 3 more questions, and they're going
Actually,
to
I
be,
don't even think we have time for 3.
they're going to be 3 rapid fire
I'm
questions.
gonna ask the panel to move into our conclusion, because we did promise folks we'd be done by 11:30. If when that's done, if the panel wants to stay around for additional questions, we welcome that, but we did promise people they could leave at 11:30, and I don't want them to be fidgety. So if you could move into the conclusion.
What? Joker's fidgety?
God knows it.
So before we end today's, discussion, we want to ask each panelist one question. What can realtors do to increase the awareness in the market for housing choice vouchers?
With your investors, you really need to know what their personality is too before you make the pitch. If they're not into relationship, if they're in this portfolio just for seeing an asset grow and they don't want to deal with people, it's not the right thing for them unless they have a private property management company. So really know your client. And for you to be a messenger, just talk it up whenever you see an opportunity. If you see a vacancy sitting for a while on your listing, say, well, have you considered listing it with the housing authority? We have listings. We take listings. It's free, and I think it's really important to use the housing authority as a resource to fill units for any of your clients you're trying to get leased up.
Yeah, I would say some of the tenures of what she said as it relates to like relationships. I would just ask that you keep an open relationship with the housing authority, and I think the importance of that you'll find out for yourself how well that works, what the positive and or any negatives that are involved. But if you're not open, to it, then you don't get to see the benefit of it. You're not gonna see A, B, C, you're just gonna take what you've heard or take what you think you understand and leave it at that. I know that in one of our boutique voucher programs isn't so small. We have 502 HUD match vouchers, and these are for chronically homeless veterans, right? So a lot of individuals smoke, a lot of individuals have PTSD, a lot of individuals have been through traumatic experiences, and we're able to recruit landlords through that program that we could have never imagined, just because those landlords were open to working with the housing authority, open to understanding the process, and then what that openness then evolves to is trust. You know, once they have that trust of the process, then it's a no-brainer. So I think just my main 10 years of what Mary said is just be open to it, because if you're not open to it, then it's already closed.
I think my fellow panelists stole all my talking points. I was going to say exactly the same things, but I think the bottom line is, you know, we're here to help. I mean, none of us are getting, you know, none of us are going to be millionaires in this business. We are here to help people. And so hopefully by, you know, learning a little more today, hopefully everyone can, you know, go out in the community and understand that just reach out to us. We want to try to make the relationship work and build the trust that can help landlords and help our clients.
I'd like to have our Fair Housing Committee members that prepared this event, if they could stand up, or you can wave your hands.